Of course, high prices is something that homeowners are dealing with or home shoppers, and there are some increasing signs that Canadians, younger Canadians in particular, are willing to move well beyond what was their home market to find better deals. John Pasalis is president and a broker with Realosophy Realty and joins us here in studio. John, good to see you. I know you focus primarily on the Toronto market, but how often have you been hearing this in the conversation?
Yeah, I mean, quite a bit. It's interesting because, we're on the ground. We hear from buyers every day. And for the past couple of years, that has been a common theme. Many buyers deciding to hit pause and consider actually moving out of province or even out of the country because prices are so expensive in the Toronto area and people just don't want to be handcuffed to a very high mortgage for the next 30 years.
Yeah, so when you're talking to different clients, this comes up, like maybe someone's thinking Alberta versus Toronto as opposed to like this street versus that street?
Yeah, absolutely. We had clients who have just decided to move to Alberta, move to the East Coast, or move down south. Again, of course, most are staying here, but definitely it's a conversation we're having more of and a conversation we didn't have 5-6 years ago.
Yeah, and so when we think about the price of a home today, even after we've been grappling with higher interest rates, or I guess, how would you characterize what prices look like today versus even just a few years ago?
Well, I mean, today in the Toronto area, prices are roughly 10 times median income. Which is unbelievably unaffordable, considering you can only borrow about 4.5 times income in Canada. So it's difficult markets to get into. And I think it's one of the reasons why people are looking elsewhere. And I think COVID was probably a big factor in all of this as well. I mean, more people working from home, not needing to go into the office, helped accelerate this trend.
Interesting. And I guess at the end of the day, the supply-demand situation adds fuel to the fire? Or?
Yeah, absolutely. And especially in markets like Ontario, I mean, we're not building a lot of family-sized housing. We're building a ton of condominiums. Most of those are small rentals. We're not building family-sized homes. And that's putting upward pressure on that type of housing, which is why so many people are leaving, because it's tough to get into that market.
And then does that bleed everywhere? Like for those who are curious about, maybe it's the apartment market, the condo market, they're looking for maybe less space. It's just you're seeing this reality everywhere?
Yeah, absolutely. And what started happening first is people just started leaving Toronto and going to smaller cities outside of the greater Toronto area, to London, to Kitchener, to Guelph, to Barrie. And then, of course, during COVID, those markets exploded, and now it's kind of extending even further.
And I guess for the amount of supply that's on the market now, because we've heard about in this environment, there's a lot more for sale in the spring season. And maybe things aren't moving as quickly because everybody feels a little bit stuck. But the pricing itself is not changing dramatically to change the equation or get more properties moving.
Exactly. I mean, prices have been sticky. In the low-rise market, sales are very low. Inventory is pretty typical, but sales are 30% below where they normally are. In the condo market, listings are actually at pretty much an all-time high, largely because we're seeing more investors exit that market because the numbers don't work well to be a condo investor when you're paying 5+% on your mortgage.
So I guess so everyone's going to watch what happens with interest rates. That's one of the one of the factors to consider. That.
Yeah, absolutely, because the high rates now are making it tougher for buyers to actually get into the market at these prices. It's making it harder for investors to finance their units when they're paying 5%. So it's impacting both sides of the market.
So how does this all net out? I mean, especially with this more dramatic trend of people, I mean, you said not just moving to a different province from the most expensive cities, but moving out of country?
Yeah, definitely we're starting to see that. And we'll have to see how this plays out. I mean, the federal government's looking at decreasing non-permanent residents. So in theory, our population growth should go from 1.2 million people per year now to 300,000 a year from now. That will, in theory, take some pressure off of house price growth and rent growth, and ideally, keep people more in the province.
What else should you be watching when it comes to the housing market, kind of for the rest of the spring selling season? What are some of the trends that are really catching your eye?
I think the big one's what's going on in the condo market. Again, we're seeing a lot of new listings hit the market. We're going to have a record number of completions. We've been seeing a decline in rents since August. That's likely to continue, which is going to make it even harder for investors to hold on to those units, especially ones who bought recently and are completing this year.
How much of that market is influenced by investors as opposed to people who are buying those as places to live?
Significantly, because most new condo completions were bought as an investment. Most of those people are renting them out. And again, if you think about, who's the first person to kind of pull the cord and start selling their properties when rates are high, it's usually investors. I mean, single-family homeowners are not going to sell their family home. So this is why we're seeing a big increase in the number of listings in the condo market right now.
It's kind of interesting to have this conversation with you while simultaneously having a conversation with an economist earlier about a resilient Canadian economy, the fact that people are still spending, that there should be some wiggle room for the Bank of Canada not to lower interest rates, and yet we've got this elephant out there, which is a complicated one, and it's not a today story only, it's a story over the next 5, 10, 15, 20 years, but it is a complicated story, and one that impacts us as individuals, it impacts the economy, it impacts the political dynamics as well.
Especially if we start thinking about, condo starts and completions and housing starts and completions are going to be trending down. That's going to be putting pressure on jobs and, of course, on the housing market.
All right, John, thanks very much for the breakdown.